right, looks like we should be good. Let me check this out here. Okay, what's going on, everybody? Let me make sure I have invited everyone to join the live session. And this way, we can get started. Let's see here. Make sure we're live on Twitter here. Yep, we are live on Twitter. Let's make sure that our Facebook friends also see us. Let's see.
God.
Let's see. And I think we're live here. Don't see live on Facebook. Okay, no worries. I think we're live on YouTube and we're live on Twitter so far. So let's get started. Welcome everybody to November 3rd, Election Day. For those of you who are in the US, congrats if you did vote. You have performed your civic duty in a democratic society where you get to vote on your candidate. And no matter who you voted for, our goal here today is to discuss what the impacts of each candidate are on the markets, whether it's on gold or Bitcoin, the stock markets, the US dollar, currencies, commodities. We'll go through the whole gamut. And Faisal and I will be discussing with you today exactly what each candidate winning could offer. And not only just the candidates, we're going to be talking about potentials of the Senate and the House candidates who are running. Which party will help benefit which areas of the market, which potential commodities or anything as such. So let's get started. So welcome, Faisal. What's going on? Faisal, I think you're muted. Let me see here.
Yeah, it wouldn't let me unmute myself. What's up, everyone?
What's going on, man? So what are you looking at today?
Bro, I'm looking at a lot of stuff, man. Today is pretty much the day. Like yesterday's movement was a little bit irrelevant, but today's movement, man, this rally, you would think with all the political strife that's going on, with the fact that things still could go either way, that the market would be a little bit more timid in which direction it wants to buy into. But for the most part, it's been a rally that's predominantly led by the industrials, financials. A lot of the value stocks like oil has jumped up very recently, and tech has actually been one of the laggards this week. Like QQQ is still up 2%, but you had leaders like Zoom, which has been. You would think that Zoom would see a lot of momentum, considering we just came off the headlines that COVID cases are rising. Europe is locking down again. You would think Zoom would be one of the best stocks this week, and yet it's down 2% and actually leads my leaders in being one of the weakest ones so far this week, which is, it's a little bit confusing. Like, once again, I don't know how to juggle everything, but it is what it is.
Right. So let's talk about things from the top, right? We had the coronavirus scare. Prior to that, the U.S. economy was doing pretty decent, and I think that the numbers will tell you that the U.S. economy wasn't in the most picture perfect sight, but it was doing pretty well. Now, post coronavirus, of course, we now have an environment where it's heavily stimulated by the Fed. I think IMF had recently reported that $20 trillion of stimulus had been deployed worldwide since coronavirus scares right around March. Now, of course, in the US, we got somewhere close to about $2.3 trillion thus far. Of course, now the market is also anticipating more stimulus to come. Now, aside from stimulus, do you think that the markets overall had been a little bit more extended simply due to the fact that we had just this abundance of stimulus?
I honestly, like, I know stimulus matters, but I think the market understands that even if it doesn't get stimulus now, it will get it at some point. I think, for the most part, yeah, the market could be overextended. I really don't know how to factor in the whole stimulus thing. Yes, I get that it's positive, it's more money in the system and to keep these markets afloat, but I just don't like. Once again, stimulus is not going to fix those underlying problems. It'll bandage them, but if we keep getting continuous stimulus, I think that it could be fine. But once again, this market's valuation metrics, like, you don't really know how to account for what's priced in and what's not. You could make the argument that it is overextended, and stimulus could be one of those factors, but I think it's a whole mesh of factors. I don't think you can just purely focus on one. You could say the Fed is there, the fact that there has actually been a very nice rebound from Q2, definitely in Q3. You could point to a lot of things, but I don't know if I could definitely say that it's one factor. And if you could give me 1 second, I got to go let my dog out real quick.
Sure. So folks, make sure you all hit the thumbs up. Faisal and I are going to stay with you guys, periodically through the day. At least I will want to do more live sessions for our Advantage members going into the election day. We're going to be discussing the different risks and benefit associated with each political candidate and each party and what sectors that they can impact. And especially what we can talk about Bitcoin and gold, different commodities, and of course the stock market and different sectors within the stock market that we feel are going to be benefited by either candidate or either party. Now, if you have any questions, make sure you drop them in the chat so Faisal and I can cover that. And make sure you hit the thumbs up because we take a lot of time during the day, even on the weekends. I'm sure you guys know for the Advantage members, we provide a lot of content for the Advantage members throughout the week. 2-a-day videos and multiple updates through the day. If y'all are not familiar with our community, this is our community right here. All right. We have the stock market channels down here. Okay. This is the equities trading side. And then we have the options trading side. And then up here, we have DeFi trading. If you are interested in crypto, traditional altcoin trading, alpha indicator suite, which is one of our indicators, and then Bitcoin trading, of course. And then even within, the Bitcoin chat, I mean, we have a ton of people who are active from all over the world. And, all of us love trading crypto. We love trading Bitcoin. And there are a lot of cross currents that go from the crypto and Bitcoin world into the stock market world and into the currencies world and vice versa. So it helps us kind of gauge exactly what's going on in all markets. Because we trade all markets, these kinds of videos that I do with Faisal helps me get a better macro picture too. So let's get back to the conversation, right? The title of today's video was, how will the market react to different election outcomes? Okay. Now, the one thing that's on my mind, if Faisal's back, I wanted to ask you is, either candidate winning, right? You spoke about, more than likely, I mean, there may not be a big fiscal or monetary policy shift in terms of the Fed, whether Trump wins, whether Biden wins. Would you agree with that?
Yeah, I
Okay.
definitely think so.
Okay, so if we've gotten that clear, right? Let's just say, that means that, okay, at some point, really the market is expecting stimulus, like you said. And so it's not necessarily a question of if stimulus is coming, it's rather a question of when and how much. Would you agree with that?
Totally.
Okay, so then the next part of my question is, okay, if we're expecting that stimulus and it's going to come soon, we're probably looking at the reflation of assets across the board. It's like juicing up the assets, for a further pump. Okay, because personally, I believe that the stimulus has completely sort of overpowered and over-dominated what real valuations or real earnings could bring the stocks to their levels. So what I'm trying to say is stimulus itself has a larger play in terms of the stock price, especially over the past 5 to 10 years, and especially in 2020 than it ever has.
Yeah, I think definitely I think stimulus has created, and this ongoing notion that stimulus has created these overextended valuations in tech and just in general sectors of the market, and even it's created a level of standard to where investors can feel like they have some type of floor, whether it's coming from the Fed or stimulus, and so that gives them more ammo to get into riskier assets, and it's probably helped propel a lot of the software stocks that you all have seen that have made incredible gains. But I also got to say, like, this market is like in trading and investing in general is all a relative game. And when you have sectors that are not growing, that are depreciating faster than a rock, or like the airlines, who knows when airline sectors are going to be okay, because business travel may never come back to the same levels that it was. And for a company that like United Airlines, which has 50% of its revenue coming from business travel, that growth is going to be stifled for a long time. You can make the same cases for multiple sectors: energy, hospitality, some banking sectors. I mean, the list goes on for what has been really affected by COVID, that transcends beyond the vaccine timeline. And so when you have the narrowing of growth in the market, you're going to see people pay more for the things that are growing, and even astronomically more than for stocks that are growing and accelerating their growth. So, I continue to believe that, yes, stimulus is great for the market. It's great for the broad market in general. But once again, like, for people who are getting caught up on valuations, I hate to say it, I was someone who was definitely caught up on valuations beforehand. I was like, no, I cannot buy this stock that's a 300 PE, because last year I was just, a growth stock was considered something that had, about a 15% growth rate trading at like a 30 PE. And now you're trying to buy companies that are growing 30-40% top and bottom line, but they're trading at 400, 500, 600 PE. And for the most part, I feel like that is part of the new standard that has been set because of how limited growth has become. So once again, the stimulus may help the overall bottom line of the market. It'll help the broad sectors. It'll keep the floors on the airlines, the hospitality stocks. But I still think the way to play is tech, and tech naturally will get a benefit because interest rates are probably going to remain low, so that small businesses and other sectors that are affected by COVID can recover faster. So,
Yeah.
I say don't worry too much about stimulus.
Okay. Well, let's sort of dive into that a little bit more, because I'm kind of on the other end of that discussion, or this argument, because I feel like the Fed has sort of created this permanent bid in the market, that has put a tight floor on the market itself. In fact, not only has it kind of created a tight floor on the market, one could argue that it has started bidding up the market in many assets across the board. And if it hasn't even, let's just say you don't even want to believe that, well, it has flushed the environment with such cheap money, low interest rates, right? We can then make the argument that, okay, well, if the Fed has created this environment of, there is no other alternative because bonds are not really yielding, right? The fixed income markets are really not doing that great anyway. We know that the American economy is generally struggling, and now that money has become, so cheap to borrow, the financials are not doing so great. So all the money is kind of pouring into some of these companies, which are, you could say they're innovative, or these are tech companies, so they should be growing. But the Fed itself has kind of put most investors further out on the risk curve because they've not given you any choice where else you can put your money to get yield. So wouldn't you say another package of stimulus further pushes investors out to take more risk on their money?
Yeah, you could definitely make that case for it, but once again, I think stimulus is definitely needed for, like, parts of the market. Like, you definitely need stimulus for the airline industry. You need stimulus for the energy industry. Just because stimulus ends up being one of the factors that propels software stocks to all-time highs doesn't mean it's not necessary for the general economy. And so, I just continue to look on that. Like, the way I try and just digest future stimulus and how stimulus will affect everything. It's just it'll keep the floors on a lot of the weak stocks. I don't necessarily think stimulus is going to be that big of a factor in propelling software stocks or tech stocks or healthcare stocks in the future, more so than it will be keeping those floors on those bailout industries.
Yeah, fair enough. Let's start diving into some tweets that I'd marked out because I personally feel that, you know, you and I spoke about this before, blue wave or red wave, right? We're thinking that in either case, I don't think there's going to be a big policy shift on the side of the Fed, right?
Yeah, I don't. I really would be surprised if there is, but um, who knows? I mean, if the economy somehow recovers to a large extent, in 2 3 years or in 2 years, sure, you could see a policy shift, but nothing in the immediate term. No way.
Yeah. So let's sort of discuss a little bit deeper exactly how the market is positioned because, blue wave or red wave, I think most people in general are kind of thinking, okay, we don't really care who's going to win in terms of the presidential election because I think the Fed has kind of dictated its policy stance on stimulus and that it probably believes the markets as well as the economy will require another package and we'll probably need some fiscal or monetary support going into 2021. And we also see that cases in Europe, right? COVID cases are ramping up. Some of the countries are going back into lockdown. So it seems like the market has a couple different trades that are set up, and you could make the argument that there are some people who are offsides, there are some people who are overly positioned on one side, and whenever you get that kind of one-sided positioning, well, the market will generally try to go with the other side, just because more often than not, when you have too many people positioned on one side, the market will try to weed out those positions. So we have the short position in 10-year bonds or standard deviations away from trend. This again, goes back to the conversation of bonds have been relatively calm. They've been kind of range bound, yet the stock market has been, rallying higher and higher. And I've said this before, the bond market to me, and even the currency markets are the arbiters of truth, right? And if they're kind of signaling to you that they're not buying the recovery, meaning they're not, potentially showing reflation, it means that there's something off. It can't just be ignored. Do you kind of agree with that basis?
Yeah, totally. I think if you're a pure stock person like myself, and I pretty much only know stock, equities and things like that, you got to take into account that bond traders are way smarter than stock traders. Just on a general basis, it is much harder to trade bonds. It's just it's an asset that requires a lot more detail to excavate and really figure out before you actually make that purchase. So yeah, I totally agree. If bonds are not buying this recovery, then that is something that people should take note of.
Yeah. So we have, record short position in 10-year bonds, right? Speculators are near record short on the US dollar, and they're, of course, record long on the euro. Now, euro recently started to break down, but the dollar is generally over the last, several weeks, it's kind of also range bound, right? In fact, you could make the argument that maybe the dollar is kind of creating a base in this area. Okay. So basing out doesn't necessarily mean that we have to bounce straight up from here, because of course we could start breaking down further. And one of my arguments for the dollar, at least in the near term, is it may need to spike up a little bit higher and then maybe start its rollover going into the next couple of years. But of course, that's pretty far out. For now, it looks like at least the dollar is basing out. So the
I have
point of all these,
I have a quick
sorry.
question for you, just real quick. Do you think the presidential election will affect the volatility of the dollar?
Um, I don't know. I mean, that's a good question. The way I think of the volatility itself is I think the currency markets are going to, in some way, factor in what the Fed is doing. I really don't think that they're truly thinking, what presidential candidate is going to truly impact, maybe foreign policy situations, because America is kind of generally kept in line and in step with its existing foreign policy. unless we completely deviate, okay, then that's a big surprise that you have in the currency markets, right? Because currency markets only get shifted, in my opinion, by two major factors: politics and crumbling internal currencies, right?
Hmm. Okay,
And
gotcha.
so I think America being sort of the beacon of democracy, if you will, it doesn't seem like whether Trump wins or Biden wins, I don't think we're factoring in like a currency collapse of any sort. Nor do I think we're factoring in any sort of economic collapse, because I think we've kind of proven to the world that we don't really give a shit about COVID. We will power through it. We're not going to shut down, and we're going to keep this economic engine chugging and the stock market engine chugging. You know?
Yeah, but see, that's the thing. If there is a Biden presidency, don't you think that automatically increases the odds for measures like restrictions? Like I just got into a Disney short this morning. Disney was up. I want to say it was up a lot, and my theory was if Biden does win, and I personally think Biden is going to win. That increases the odds for more restrictions for high density places like Disney theme parks, and because they're already struggling and account for around I think like 40% of Disney's total revenue, I was like, okay, that somewhat makes sense to me that's a stock that I could see move to the downside as far as if Biden wins. So, I mean, do you think that kind of makes sense, or do you think it's just I'm a little bit reaching at that point?
I mean, I don't think you're reaching. I think that's a fair assessment. But if you listen to any of the Biden debates, and I did, and I'm sure you did as well, he was very, very careful in his words, as all politicians are, of how he chose to say we don't need to shut down. Rather, we need to empower businesses with the proper safety and security measures. Now, I don't know what that means. Maybe he's saying that, hey, we'll give you a shitload of money, go buy, hand sanitizer and temperature gauges and whatnot, and let's open up these fucking parks, right? I don't know if he's implying that, but I would kind of say that I don't think a Biden presidency necessarily means we have to go back into shutdown or lockdown mode. It seems like both candidates have their respective fear mongering. Like Biden does that with the whole, hey, you'll only see, you'll see one person missing from the dinner table. Like,
I know, man. He kept saying that all the time.
right. And then Trump sort of has the other side, which is, COVID is not that big, and, like the other fear mongering that Trump has. So I'm not going to pick either candidate at present moment. But I think what I've sort of gathered from this whole thing is, we already know, like we said earlier, right? Stimulus will probably flow. If Trump wins and Biden wins, I think the only thing that I personally see is maybe sector performance might defer, right?
Yeah,
Like,
totally agree. Hmm.
yeah. So I think you and I were talking about this maybe 2 or 3 weeks ago. Like we saw solar stocks kind of taking off, and well, that doesn't make any sense if the market is kind of factoring in, a Trump win, right? Because Trump is more so of, what did he call it? Like clean coal or some shit, Um,
Yeah,
and,
yeah,
and,
that
and
was
so,
funny.
and so at least Biden, we know that, okay, something was going on in the solar markets, that solar stocks were moving up. I think even, healthcare stocks were kind of doing decent, correct?
Yeah, I mean, definitely solar stocks have been awesome, but even the healthcare insurers and the pharmaceutical companies who have a lot at risk if there is a blue sweep where Democrats control pretty much all the branches of government, that sector I think would be the one to see the most volatility. But so far they're holding up fine. It's a
Yeah.
really strange thing for it being the day of the election, and yet you still have stocks like UNH up 3% today, trading close to all-time highs. When if there is a blue wave, I think the odds of the structure of private insurance being changed is dramatically higher versus it being a gridlock or Trump winning and Democrats. I don't even know if Democrats can win the Senate without winning the presidency, but I don't know. That's just
Yeah.
my scenario. Everything's just a little bit out of whack today.
It definitely seems a lot out of whack, because I was even checking the betting markets, and there were like some betting sites which are completely more so dominated by a Trump win, and the other sites more so dominated by a Biden win. Of course, I don't think anyone is factoring in a Kanye West win. That would be a real surprise.
That's true. Oh
I
yeah,
know.
that's right.
But yeah, that would be really interesting. But the thing is, going back to the original point, right? So Trump win, Biden win. Sector performance may differ, but overall market performance, I don't think it's going to matter a whole lot like down the line. I actually want to pull up some statistics about how the historical, historical presidents have done for GDP in the stock market. Okay. So if you look across the board, going back to the Jimmy Carter days, all right, the Democrats have averaged about 6.0% nominal GDP growth, 2.9% real GDP growth, lower debt growth, and lower real debt growth. So across the board, one can make the argument that Democratic candidates have been better for GDP, and they've in fact been better for debt growth, right? Then we move on to the Wilshire returns, okay? Going back again to Jimmy Carter days. Across the board, Democrats have returned about 15.6% from November, and then from February onward, they've returned about 16.1%. Again, it's not that big of a percentage, but of course, it doesn't make you think that, okay, wait a second, if Democrats get into the House or Democrats become if there's a Democratic president, it's going to be bad for the market. That's not what the historical precedent says, right? So this whole conversation that people are having that Trump is going to be better for the stock market, well, history doesn't really reflect that.
Oh, I got to get on you because I'm definitely someone who firmly believes, and I'm not a Trump fan by any means, but I definitely believe that if Biden is elected, we will see returns diminish, because you got to think a lot of the gains that were made. And if you look back since 2018, 2017, when Trump first got elected, that market was humming. Okay. And one of the biggest reasons why it was humming is because he cut the corporate tax rate. He cut a lot of taxes for a lot of these companies. And that itself had propelled earnings to really record highs. I mean, I remember in 2018, 2019, that economy was awesome. And a lot of companies that were growing beforehand just saw even more accelerated growth. So I think a lot of those tax cuts has been baked into this huge extended rally. And if Biden does, and I think he's already said that he's going to raise the corporate tax rate, you will get some volatility as a result of that. Now, I do agree that in the long run, I don't really think that there'll be that much. Like, you should not ever bet against America just because someone else is in the presidency by any means. But I definitely think that you will get, if we're looking at a year by year basis, the market will be very volatile and could be somewhat lower on Biden's first year, especially if he starts talking about that corporate tax raise.
Yeah. Well, the thing is, I totally agree that back in 2016, right? I think what happened was the market was probably anticipating a Hillary Clinton win. Okay.
Mhm.
And then you could see right before election time, the market actually dipped a little bit, and then it saw, what the hell? Like, Trump won. And then it just took off with the swiftest, and it just didn't look back. Right. So these are the surprises. And I want to actually discuss this a little bit more, because there's more to just the presidential election races that are going on. For those of you who are watching this outside of the US, on the ground, and across all states in America, there are many contested seats, whether it's congressional or whether it's senatorial seats, that could make a pretty big impact no matter who is president. For example, people might say there might be a red sweep coming. And what that means is, you might have a Trump win, a heavily more populated red Senate, and potentially an even more leaning red House. Okay. Now, what that could mean is, well, we probably get more, tax cuts, right? Trump is probably going to definitely cut the corporate taxes. I don't know what he's going to do in terms of, China and maybe repatriating some of the supply chains from China back to the US. That could be pretty good. But again, I feel like we've kind of heard this promise, and it's kind of been, half-assed by many presidents in the past. So I don't think that's happening, because no one wants to pay $10,000 fucking dollars for an iPhone,
True.
So I think the red sweep could be, okay, more tax cuts, Trump being a little bit more favorable towards, the traditional energy companies. Solar may not do as well. We can make that argument. Now, the other side is the blue sweep, right? So Biden wins. The Dems get the Senate, and the Dems have a much more majority on the House. What that could imply is corporate taxes are higher. Other taxes could also be higher. More than likely, we'll probably get more stimulus, right? But the other thing I was thinking, I want to pick your brain on this, is under the blue sweep or even under Biden, you could say value stocks might actually do well. Sectors such as solar and healthcare will probably do well. What do you think about that?
I definitely think that value stocks could, because maybe some of the thing that's priced into a lot of these industries like airlines, banks, and whatnot is the fact that COVID does not seem to be getting better. Like I know we're all waiting for the vaccine, but we are still unable to contain it. And I think if we get, Joe Biden, who's a lot more serious about containing the virus, that will alleviate the true problems within these businesses, which is that people don't feel safe going out and doing the things that they used to do. So, value stocks in that regard, the deep value that have been hit by COVID, sure, I think you could make the case that there could be some inflows because things seem like they're going to finally start to look up. But once again, I would definitely temper expectations. I don't think we're going to get to those highs that we were at pre-COVID, but I would definitely wouldn't be surprised to see value do well. I think definitely the sector to watch though is the industrials. Now, if we do get a blue sweep, I think the odds of an infrastructure bill getting passed like within the next 6 to 8 months is very high. I think that's going to be where the job growth is going to come from, since we're in such a hole on the small business side. And so I think if you are someone who is betting on a blue sweep, definitely the industrials is probably the best way to play it, in my opinion, just because of the odds of a infrastructure bill that comes sooner rather than later.
Yeah, that's a good point. Let's take some comments and questions from the chat, right? So we got a couple people saying, if they broadly provide stimulus again, I think tech and growth stocks get the hype. People who got cash and don't need cash will surely be more risky. So I think he's implying that more and more people will probably get back into stocks, and especially these tech stocks that are getting more of the attention. Sure. What do you think about that?
Sure, I think that's definitely an outcome that could happen. I mean, I don't know how much what the state of the economy will be, or what the state of small businesses will be if this second wave accelerates or whatnot, but I doubt it gets to as bad as it was in March. So I think I could agree with that people will have these reserves of cash that they got, and they will most likely use them to be a little bit risky because maybe their business is not doing as bad, or they can withstand this drop. So yeah, I think that you could make the assumption that tech stocks and high risk stocks could see inflows due to stimulus, but I tend to think that it really doesn't matter as much. These are, in my opinion, these are the fastest growing companies, and as long as COVID continues to be a big part of the economy, you're going to see an acceleration of adoption of these technologies across the board. So I think that's going to be the main driver versus future stimulus.
Good point. Some more comments. Need to factor in the polls being wrong. Corporate tax increase is going to crush the markets. So comment number one, need to factor in the polls being wrong. I totally agree. I mean, Nate Silver and 538 got absolutely demolished in 2016. I'll be the first to admit I lost a couple G's betting on Hillary Clinton in 2016, and it was devastating. But I mean, I agree. It's quite possible that when you have such a tight emotional race in the presidential candidacy, it's very hard to sort of gauge and try to logically factor in mathematics into people's emotions of what's going on in the environment over the past 4 years, or even over the past 6 to 9 months.
Yeah, I totally agree. And then on the corporate tax rate, yeah, I definitely think you're your assumption of the market getting crushed is probably right, but don't expect it to stay down for long. I think once again, taxes do matter, but they are not the main driver of growth. And if you're someone that likes tech, if you're someone that likes certain sectors of the healthcare or industries of healthcare, like medical devices that are growing double digits, housing stocks are still growing double digits. I don't know if when unemployment will factor into that demand, but it may be starting to factor in now. But as of now, I checked the estimates; they're still expected to grow double digits now and next year. So you are going to get this continuous growth beyond what tax cuts will do. And of course, earnings will not be as high, but if we have a restricted market going forward, maybe for the next 2 to 3 months, as COVID continues to restrict that growth in the areas that I mentioned before, you could definitely see, companies that are growing continue to see their prices go up, even if their taxes go up.
Yeah.
Once again, if you are growing in this environment, your premiums are naturally going to be bought at a higher rate.
Yeah. And we've kind of discussed this several weeks ago too. There's also just so many people on the sidelines that if you get a pullback, no matter if it's, say 10, 20, 30%, there's a lot of money sitting on the sidelines, whether it be pensions or whether it be global bonds, which are not yielding shit. You have bond yields going into negative territory, whether it's Japan or many parts of Europe, right? German bond yields actually broke down, into the negative territory, several months ago, right? So
Mm.
you have all this money all across the world seeking a place for yield because there's not many other markets in the world, especially the stock markets, that are producing as much of a return, as much of a yield like the US markets are. Now, of course, there is a Chinese market, but it's kind of right now, it seems like the world is sort of looking at America like, holy shit, these guys just have a printer that just goes burr all the time.
Yeah, and we're not going to lock down like every other country. Like it's that's going to be a very key thing. If we can get somehow the economy back to like 75% of normalcy in terms of people going out again and doing their habits to a 75% extent, like that's going to be phenomenally better than the European countries that are locking down again. And I think people who have money, they're going to look at the US and be like, okay, your economy is not going to be stalling like the other economies. And that's going to be really beneficial. You're going to see a lot of money move in that maybe was thinking about moving into Europe and probably go back into the US, because I don't think we're going to go into another lockdown stage that'll restrict that growth again.
Yeah. And, kind of going along with that point, I want to discuss the other X factors, if you will, the surprises that people are not accounting for. So the one surprise that, I want to talk about is, okay, we understand that there's going to be a candidate winning tonight. Okay. But what we don't factor in is, let's just say, gridlock, delays in understanding who is actually the clear winner. And this sort of delay or a surprise is probably going to start shaking the market, especially if you start seeing civil unrest, because we've seen across the news outlets, right? There's businesses that are, putting up these wooden boards to make sure that people don't start throwing rocks or having riots and stuff. That to me is concerning because it seems like inside America, whether it be Trump or Biden winning, there is this growing emotional frustration, if you will. I wouldn't call it anger, but it's frustration. And whether that be because of COVID or whether that be because their favorite candidate isn't winning, right? Generally, every election cycle has something of a frustration, popping out into societies. And it seems like this time around, that's been building up much more heavily. So the surprise of this whole thing is the gridlock itself, in my opinion, if we don't see a clear winner or loser out of this whole thing soon, that's when the markets will start to get shaky. What do you think?
I actually don't know. I think I wouldn't be surprised to see the market ignore something like that for a couple of days, and then it may end up saying, okay, this is big news after if this civil unrest continues. But for the most part, I feel like it's news that the market will shake off. Once again, the market's going to get what it wants in the end, no matter who's president. So even if you do get a dip from civil unrest, I don't think it's going to last more than maybe 2-3 days, and that'll most likely be a buying opportunity for a lot of good stocks.
Yeah. And the other surprises, and the way I am kind of looking at this whole election cycle play out is, with the blue sweep and the red sweep, right? I mean, it's possible that you have different combinations. Maybe you have a Biden with, the Republicans controlling the Senate and the House. Well, they might be less inclined to pass the stimulus, right?
Oh, that's true. They've kind of made it known that they don't want that much. They don't want to increase the debt. I think that's what Mitch McConnell has been saying. He's like, he wants to do like a skinny bill or or something. This dude
Yeah.
loves skinny bills for some reason. I don't know why, but he kind of looked like a skinny dude. But I could definitely see that scenario, and that may be actually, yeah, that would definitely be bad for the market. But I think at a certain point, even if they control all branches of government, they're going to look at the economy, see people struggling, and there will be some stimulus, but I don't think it'll be as big as like a Democrat stimulus or anything like that.
Gotcha. Now let's talk about some other things, right? Gold. We see gold coming up back to this trend line. I mean, hasn't really done that great over the last, what would you say, like, month and a half.
Yeah.
But the way I'm looking at gold is it looks like it's created a nice, base over here. And if it starts breaking through this trend line, I mean, we should start seeing gold accelerate to the upside. And if gold starts accelerating to the upside, I think that tells me two things, right? Number one, gold is probably anticipating, again, more stimulus. Gold does generally better when there are inflationary pressures within the currency itself. So, of course, that's going to be US dollars and probably other currencies across the board, which might be going into more stimulative programs. Um, the other thing I want to talk about is Bitcoin. I mean, Bitcoin has been absolutely shredding it. Over the past several weeks, basically from the beginning of October, Bitcoin is up. Let me see here. I mean, from the beginning of October right here, Bitcoin is up 30%.
Oh, damn.
Yeah, it hit the 14,000 level just a couple days ago, rolled back over. But again, it's staying right around that area, not necessarily breaking down, but it's kind of stalling a little bit. This kind of stuff tells me that the markets are right now, a little bit more risk on. You would figure that going right into election time, it might be, I don't know, time to de-risk a little bit. It might be time to at least trim back on Bitcoin positions across the board because Bitcoin is higher beta asset than, say, things like gold or stocks. But actually, it's the complete opposite of what I'm seeing right now is Bitcoin literally dominated, the the cycle over the last month and a half in terms of returns.
Yeah, that's very interesting that you say that, because it seems like October was a fantastic month for Bitcoin, but October was a pretty ugly month for a lot of these high growth stocks. This was the first month where I believe, okay, so on October 19th, 20th, that's when stocks really started to roll over. And I'm speaking on high growth stocks, your Zooms, your Pelotons, your software stocks. They really started to weaken to a point where we had 2 weeks ago, 3 weeks ago, they were down 10%. And then last week they were down another 10% or something like that. So that's really interesting to see. And you and I have been keeping a lot of communication over the past, well, actually all the time. So we always kind of text each other when Bitcoin's doing good or when high growth stocks are doing good. And for the most part, during this recovery cycle, it seems like high growth stocks and Bitcoin sort of mirrored each other in terms of when one would go up that day, the other one would do well. And we used to package that idea by saying, okay, Bitcoin and these high growth stocks are both high risk assets. So therefore, that should mean there's this sort of risk on mentality. But it's really interesting to see now that Bitcoin is completely split off from the high risk assets of the stock market. So I think there could be some fundamental change within Bitcoin that could really be propelling these gains. And I Like I feel like for the most part, it should have followed the high growth stocks that it had normally had this entire recovery cycle. But I don't know. I just want to get your thoughts on if there was a real fundamental change in Bitcoin.
I mean, over the past month and a half or so, there's a lot of positive news that came out. Probably over the last like 2 or 2.5 months. Number one, MicroStrategy, one of the companies I think I told you about, the CEO Michael Saylor, he and his company rather bought about $500, or I'm sorry, $500 million.
$500. Like damn.
MicroStrategy. Let me see here. And the thing is, when they bought this like amount of Bitcoin, not a single big source, in terms of news, no one covered it, right? And so I was thinking to myself, what the hell is going on? Well, I mean, when someone makes a big purchase like that, you would think that I don't know, some media outlets going to cover it, but not a single one. It's mostly like the crypto outlets that covered it. 425 million apparently is what he bought. And by the way, his position is already up. What is it? 35-40% from when he got in. Like that's insane.
That's amazing.
Yeah. Then aside from that, I think fundamentally we had the halving happen. Okay. Now, of course, for those of you who do not understand what the halving is, every 3 to 4 years there is a, how would you say, disinflationary halving in supply that gets cut of the amount of Bitcoin that is dispersed into the system of every 10 minutes that it runs. Okay. So every 10 minutes, like clockwork, Bitcoin always churns out a new block with new transactions embedded in it. And within the transactions, there are miners doing the work to solidify and do the hard work and the hashing for those transactions. And if they are the first to validate that transaction, they get a reward. Now, back in the day, when Bitcoin was first incepted, I think the payout was, I don't know, maybe somewhere close to like 50 Bitcoin, and now it's come down all the way from 50 to 25, 25 to 12 and a half, now to 6.25, if I'm not mistaken. So you could see every 3 to 4 years, this sort of disinflationary supply cut keeps happening. Now, the interesting thing about that is every time that supply cut has happened, Bitcoin has had bigger and bigger cycles. Now, percentage-wise, those cycles have been getting smaller, but price-wise, price has generally always gone up and put in higher highs. Now, the sample set of data is not that big because we've only had 3 total supply shocks, if you will, or halving cycles. But one could make the argument that the psychology behind the supply cut is still the same. It's like if someone told you that the supply of diamonds, if you will, is lesser in the market. Well, the average cost of each diamond in the market is going to go up. It's just basic supply and demand economics. Now, if you believe that Bitcoin is one of those assets, whether it be a diamond or a scarce asset, then by the laws of economics, it should generally keep going up.
Okay. Yeah, I just I feel like the demand areas where I get a little bit confused, because I get that the demand to trade the asset and have the asset is different, but the demand to use the asset, which is where I feel like that's where I completely stop at Bitcoin, is I have no idea what the real value is of this asset. And for the most part, if it's something like a currency, or it's supposed to be used as a way to store money or monetary value, if I cannot use it in every case, like going to the grocery store, doing things like that, then that itself, there's no demand coming from me. Do you get what I'm saying? Even though there could be demand in terms of me wanting to trade it, I still think the core crux of the value still needs to be defined a little bit better. But that's just my opinion.
I think the value of how you understand Bitcoin is, I totally agree that there is no sort of proper cemented way of how we go about understanding, what exactly is a Bitcoin supposed to be valued at, because there's, no earnings, there's no CEO, there's no value proposition, and there's no, future projections, right? or future projections, at least as per, products sold or services provided, et cetera. So you don't have those kind of data sets. So I believe that you could make the argument that Bitcoin is, for the most part, very speculative. Like Paul Tudor Jones, he said something really interesting and amazing recently in an interview. He said that betting on Bitcoin is betting on humanity, because what you're effectively saying is at some point, you're betting on human innovation, and you're probably also betting on the fact that we are in many ways, fallible, because we've made so many mistakes due to our complacency of how we have raised so much debt in the world, or raised so much debt in societies, and our currencies are over time becoming more and more worthless. And Bitcoin, being the disinflationary asset that it is, again, because it's not controlled by any one entity, you're effectively betting on humans to say, this is the currency that we believe in. We don't give a shit about your dollars or anything. Now, of course, 10 years from now, this whole argument could completely, fall apart. Maybe Bitcoin goes to zero. We don't know. But it's already been pretty, active and alive for the last 10 years. And every time CNBC has said Bitcoin is going to die, or it has died, it has come back stronger and harder. Now, the other argument that I think, most people have about Bitcoin is, well, I can't go into the grocery store and buy, my bananas or whatever. Well, you can't do that with fucking gold either, right? But people value gold, right? So I think for the most part, value is nothing but a psychological phenomenon, if you will, because we value things subjectively. And if a society, a community, a country, or the whole planet itself values something as invaluable or highly valuable, then that's the value that we give it. So at present moment, one could make the argument that the value that people are giving Bitcoin is $13,755, because that's what it's trading at. Same thing with Apple stock. Now, we are not, the how would you say, the people or the arbiters of valuations who get to decide what is something supposed to be valued at, right? Because as we very well know, the market is always right. No one cares if you or me think that it's going to 20,000, or it's valued at 20,000, or you think it's valued at 2,000. What does the market say? And clearly the market is saying, we don't care what, other people think, how high or how low it should be valued. It is going up continuously. And if you look at, let's just say a 3-month or 6-month basis, I mean, there are some amazing looking charts. If you look at Bitcoin from, say, a 3-month or 6-month basis, it just looks like it is just starting to break out,
It definitely looks like it has momentum, and that something has changed from the beginning of this year till now in terms of how it reacts and how it goes along with the U.S. stock market. So I'd definitely say that I may not be the biggest Bitcoin supporter, but I definitely think it's one of the assets in this marketplace that has the most momentum. And at this stage, I don't know if it's something you can fight.
Yeah. Oh, yeah. I mean, I think for the most part, like, unless you have been shorting the market, quite properly from the cycle tops to the cycle lows, if you are just perpetually short Bitcoin, I mean, it has not been, a good ride for you, unless you caught the 20,000 top and you thought it was just going to keep going down further and further. Well, it didn't. I mean, it's back up to 14,000. And it did so last year, around June as well. So you could see that it seems like, there is a little bit more acceptance to the price of Bitcoin, to the value of Bitcoin. And, some would say that to the utility of Bitcoin.
Sure. I think so.
Let's sort of pivot a little bit towards the currency markets, because, again, I kind of want to wrap up today's analysis with just talking about, markets as a whole, of exactly, what sectors could benefit, what markets could benefit on a Trump win or Biden win or a red sweep or a blue sweep, right? So just to sort of summarize, a Trump win, in my opinion, could be beneficial probably for oil companies. I'd probably even make the argument to say it'd probably be beneficial for industrials. Maybe not so much financials, whether it's Trump or Biden, but energy companies in general. And probably be good for tech because with a Biden win, the way I'm thinking is there might be a little bit more of a cap or regulation on, the monopolies that Facebook and Google and Microsoft and all these companies have. What do you think?
I definitely agree with you with the risk of the regulation overhang on these big companies like Amazon, Netflix. I forgot who else was labeled. Google. Actually, no, Netflix wasn't labeled as a monopoly. I don't think.
No, but I think Google definitely was, Facebook definitely was. Um,
Yeah, I think those guys definitely were, and the risk of them seeing, especially if there's a blue sweep of seeing some regulation. Yeah, I think that's definitely something that could happen within 4 years. That's not out of the spectrum. But for the most part, I think you kind of hit it, except for oil. Oil is one that I just don't like. As long as COVID continues to restrict the use of gasoline and oil in general, people are not going out as much. I think these stocks are going to be completely hindered. Even if renewable development does end up getting stalled with a red sweep or whatever, I'm still just I think oil got one more leg down to go before you can make those generational buys. But yeah, I think it's going to happen. They're going to do bad under any presidency. It doesn't really matter.
yeah.
But
Well, I think
oh, I'm sorry. Go ahead.
no. I'll let you go.
There are two sectors that I do want to pay attention to no matter who wins. You hit it. Industrials are the sector because I think an infrastructure bill will get passed no matter what. As long as unemployment continues to stay this low, that is where I continue to believe the jobs will come from. So, URI, Caterpillar, these are all. This is not financial advice. These are all my opinions. URI, Caterpillar, um, what was it? Tractor Supply Company has been good, but they just had a earnings come out last week that was a little bit of a miss on the guidance, but overall I still think it's a decent value, and the chart looks very good. Sterling is a small cap industrial that I think could do well, and Waste Management. I think if a lot depends on the recovery in the small business side because I think they get a lot of their business from that group. But once again, if there's mass construction, I think the disposable the need to get rid of that waste and everything like that is going to be very high. So waste management seems like a common sense pick in the industrial sector, along with the other ones that I mentioned. And then also the medical device stocks. I think they're going to continue to do well, but more specifically the ones that make these testing equipment. So Hologen, HOLX is a good company. Danaher it's a huge medical company, very medical conglomerate company. They have a section that's done really well in response to COVID. And then Quidel, QUD or QDEL. That's probably one of I know it's gone up a ton this year, but my God, the estimates just look monstrous. I went over it in my video that I put out yesterday or Sunday, and yeah, those three. You could also look at Abbott, their rapid testing stuff, but definitely keep an eye on those stocks because I think they're going to do good no matter who wins the presidency.
Solid. Well, I think we should wrap it up here, man. I'm super excited to watch the election results tonight. And for those of you who are watching us from the US, please make sure you do your civic duty and go vote. You have a hand and a part and a say in this democracy like everybody else does. So make sure y'all go vote for any candidate that you choose, and especially vote for your local elected local candidates as well. Okay. That's it for me and Faisal. We will try to keep the Advantage members in our community updated through the day of exactly what we're seeing in the markets. Again, join the Advantage membership. There's a free Discord link below. If you want to go check out our website right here, for $20 right now, we have a special right now for $20. Okay, you can buy this technical analysis course, $20, and you will get 7 free days in the Advantage community. Remember, Advantage community is nothing but our Discord with all these locked channels right here. So for $20, you can get a technical analysis course, which you will have for life. And you can get 7 days free access to check out our Advantage membership, where Faisal and I post daily videos, how we're trading the markets every single day, crypto positions, crypto analysis, all kinds of good stuff. So make sure y'all join. And again, hit that thumbs up. Thank you so much for watching, everybody. And I'll see y'all soon. Happy election day. Cheers.
Peace.